What is Bitcoin, cryptocurrency? How to earn and invest? Hello everyone. Welcome to your favorite YouTube channel, CashKey. Today's video is going to be exciting because we will be discussing the king of coins in crypto. Yes, your guess is right. In today's video, we will talk about Bitcoin. But before we proceed, please give this video a thumbs up and subscribe to our channel so you don't miss any latest updates. Let's get back to the video. So, what is Bitcoin? Launched in 2009, Bitcoin is the world's largest cryptocurrency by market value and size. It is the first decentralized virtual currency to enjoy widespread acceptance and success. So many other coins have imitated or tried to copy Bitcoin. Bitcoin was first released to the world in 2009 by Satoshi Nakamoto, whose exact identity is still unknown. Since then, it has emerged as the currency with the greatest global recognition. Bitcoin's success inspired multiple other developers who came up with versatile types of cryptocurrencies. These rivals either want to replace it as a payment mechanism or are employed as use or cryptographic keys in other blockchains and cutting-edge financial technology. We will learn more about cryptocurrencies in this video, including how they were created, their origins, mechanisms, sources of supply, applications, and uses. Let's figure out what Bitcoin is. Bitcoin, commonly referred to as a cryptocurrency, virtual currency, or digital money, is a purely virtual form of money. It resembles an electronic cash system, although some countries have officially banned it. Few businesses currently accept it for payment for purchases of goods and services. When BTC first emerged, a subscriber to a cryptography email list posted a link to Satoshi Nakamoto's paper Bitcoin, a peer-to-peer electronic cash system, on October 31, 2008. In January 2009, Nakamoto released the Bitcoin software and announced it as open-source technology. It is still unknown if Nakamoto is a single individual or a group of persons. How does Bitcoin work? Understanding Bitcoin as a form of digital currency isn't that difficult. For instance, if you have Bitcoin, you can send smaller amounts of that Bitcoin to pay for products or services using your cryptocurrency wallet. However, it's hard to understand how it works. For every 210,000 blocks, the incentives for Bitcoin are halved. As an illustration, in 2009, the block reward was 50 new Bitcoins. The reward for finding a block was reduced to 6.25 Bitcoins on May 11, 2020. Due to the third halving, the smallest unit of a Bitcoin is known as a Satoshi. And one Bitcoin can be divided into 8 decimal places, 100 millionths of one Bitcoin. It may one day be possible to divide Bitcoin to even more decimal places, if necessary, and if the participating miners agree to the modification. What is Bitcoin's blockchain technology? Blockchain is the process of keeping and storing data that makes it nearly impossible to alter or copy it, hack it, or buy into the system. A blockchain is a network of computer systems and software that maintains and aligns duplicate copies of all transactions in a digital ledger spread all over the network. Cryptocurrency is present in a blockchain as well as the network that powers it. A distributed database, or blockchain, is a common ledger that holds data. The blockchain uses encryption to protect the information within. When a transaction occurs on the blockchain, data from the prior block is copied to the blockchain system with the new data encoded. The transaction is validated by validators, also known as miners, in the network. Now the question arises, how does this blockchain thing work for Bitcoin? The information held in the blocks on the blockchain is encrypted by Bitcoin using the SHA-256 hashing algorithm. Then a new block is constructed to encrypt and verify further transactions once the block header has been solved. This blockchain technology makes crypto safe and UG-free. Now let's understand how to mine Bitcoin. There are various ways to mine Bitcoin successfully. You can use a Bitcoin-compatible mining program on your current computer to join a mining pool to compete with the massive ASIC mining farms. Groups of miners form mining pools and pool their computing power. Bitcoin can be mined using a wide range of devices and software. Bitcoin could be competitively mined on a personal computer when it was initially made available. But now, even if your computer has more modern hardware, the likelihood of you successfully cracking a hash on your own is quite low. This is because you are up against a community of miners that produce 220 billion hashes, 220 quintillion hashes each second. You must be thinking if investing in Bitcoin is a good idea. Application-specific integrated circuits, ASICs, which are machines made expressly for mining, have a hash rate of roughly 255 trillion per second. Buy an ASIC miner if you have a handsome amount of money and can afford to buy this miner. A new one typically costs between $20,000 to $250,000. However, miners occasionally sell used ones as they improve their equipment. If you buy one or more ASICs, there are certain substantial costs, such as electricity and cooling, to consider after you get your system installed. Then there are several different software that can be used for mining purposes. How much is time needed to mine one Bitcoin? The validation process takes 10 minutes to validate the procedure and reward. With each block, 6.25 BTC are rewarded, and 1 BTC takes almost 100 seconds to be mined. Here's the answer. Everyone has a different situation and investing options, and you must take advice from an expert before you invest your hard-earned money in crypto to be on the safer side. Extreme price volatility has been a defining feature of Bitcoin's brief investment history. Things that influence this process greatly include your financial situation, risk tolerance, objectives of investment, and investment value. Do all these factors decide if investing in crypto is a good option for you or not? Now let's understand how to buy Bitcoin. A cryptocurrency exchange can be used to purchase Bitcoin if you don't want to mine it. Due to its high cost, most people won't be able to buy a whole Bitcoin. But you can buy fractions of Bitcoin on these exchanges using fiat money like dollars. Creating an account and funding it, for instance, will allow you to purchase Bitcoin on Coinbase. Bank accounts, credit cards, and debit cards can all be used to fund an account to buy Bitcoin. Now you must be thinking, how can one use Bitcoin currency? Bitcoin was envisioned as a peer-to-peer payment system, but as its value rises, its use and scenarios are also changing. You can swap it with some other currencies or use it for payment. In short, there are many options. The very basic use of Bitcoin is a mode of payment. A cryptocurrency wallet is needed to use Bitcoin. Your private passwords and PIN codes will be needed while making a transaction. Many business enterprises accept Bitcoin for their products and services. The phrase, "Bitcoin accepted here," is typically displayed on signs in physical stores that accept cryptocurrencies. Transactions can be done by using the hardware terminal and wallet address via QR codes or by touchscreen apps. By including this payment option, an online business may quickly take Bitcoin. Now let's talk about the risks of investing in Bitcoin. Since Bitcoin's price has increased so quickly recently, big investors have been interested in it. Because of the extraordinary volatility of the Bitcoin market, even if you make a large profit, you risk losing it if the price drops. As a result, anyone considering investing in Bitcoin should have a high threshold for risk and loss tolerance. For example, on December 31, 2019, the price of Bitcoin increased by more than 300%. It continued increasing in 2021, reaching a record high price of over $69,000 in November. It then dropped over the ensuing few months, fluctuating around the $40,000 mark. Lack of uniform regulations globally. There are concerns regarding the uniqueness, liquidity, and universality of digital currencies due to the absence of sustained rules and regulations globally. Risk security risk. Most Bitcoin users and owners did not obtain their coins from mining operations. Normally, people use cryptocurrency exchanges to buy Bitcoins. Since Bitcoin exchanges are digital, they are susceptible to viruses, hackers, and other operational issues. Just like any other virtual system. Insurance risk. Insurance companies do not offer insurance for Bitcoin and other cryptocurrencies. However, only for the portion of transactions that involve cash. Some exchanges engage other companies to provide insurance. Risk of fraud. The more complicated the system, the more difficult the problems are to solve. Despite a blockchain's fundamental security features, fraud is still a possibility of fraud. Market risk. Like any investment, Bitcoin's value is subject to change. During the short time of the currency's existence, its value has changed significantly. It is incredibly responsive to newsworthy events and is traded in big volumes on exchanges. The CFPB reports that in 2013, Bitcoin's price fell by 61% in a single day and by as much as 80% in a single day in 2014. That's all for today's video. Thank you so much for watching this video. We are waiting for your valuable feedback. Your appreciation in the comments section keeps us going. Don't forget to subscribe. See you in the next video. Until then, best wishes.